Revival Gold is a US-focused gold developer aiming to bring old gold mines back to life. Its latest project could be a game changer. The company has released a new economic study showing strong potential for its Mercur project in Utah. The site could produce nearly 100,000 ounces of gold a year for a decade, with existing roads, power, and water already in place. Well, joining us to talk about it is Hugh Agro, CEO of Revival Gold. Hugh, thanks very much indeed for talking to us.
Well, it's good to be with you. Thank you.
Well, Revival Gold is known for advancing past-producing mines. I'm wondering if you could perhaps start off by using the Mercur project to tell us how that fits into the broader vision.
Listen, when we think about the mining industry and what it can deliver for society, we really have to think about our footprint on the global environment. And what's great about being on these brownfield sites is that we're on disturbed sites and we can reuse a lot of the data and the information, the experience to operate in a responsible manner. So that's number one. Secondly, of course, with infrastructure on these sites, we enjoy capital savings. And very, very importantly, we get the benefit of the knowledge of how to operate on that site effectively and efficiently. A lot of benefits to being on brownfield sites, and especially at these higher gold prices, which were not experienced back 10, 20, 30 years ago. It's a great time to be back.
I want to talk about that gold price. Fascinating there. But look, you were showing some strong economics in terms of numbers. Can you walk us through what kind of numbers you want the investors to look at in particular?
Well, I think first and foremost is the IRR on these projects in domestic locations, so good geography, and with the benefit of all that information and knowledge and de-risking that's taken place in the past. So that those things are key, but the IRR is what shines through for investors. Here we are with Mercur on our preliminary economic assessment with a 27% after-tax IRR, almost $300 million of NPV from this project. And as you mentioned on the outset, just about 100,000 ounces a year over a 10-year mine life.
I'm wondering how realistic that figure is. Talk to me.
Well, again, when you're on a site where gold has been successfully produced before, you have a lot going for you in terms of restarting production, in terms of understanding how the operation will be received by the community locally, the state government, how you can operate safely and responsibly so that people can go home at night without injury, and also, of course, how the metallurgical performance of the rock, the equipment, and all of these details kind of line up. And the answer to your question is we feel very confident about this project, and we feel very confident about the numbers that have come out of this PEA. In fact, we see a ton of upside, not just on the basis of the gold price, but from exploration beyond the existing resource that's exploited in the PEA.
And I suppose where that project is, infrastructure-wise, and the advantages on the permitting is a big plus. Talk to me about why you see this as a positive.
Well, some small examples here, but they all add up. We've got grid power to site and a transformer station. So that means we don't have to worry about self-generating power, and we don't have to worry about linear permitting for a long power line to come into the site in the first place. That saves us time, saves us money, and saves us risk. And of course, it saves us money because grid power tends to be a lot less expensive than having to generate power on your own. So that's one small example. But site access, having a paved road to site, being 30 minutes from a town of 40,000 people means we don't have to have a camp. We don't have to supply food, boarding for people coming in. And those people who come in will tend to live in the community and be part of the fabric of the community. And that's part of being a sustainable operator, is integrating employees and the project with the community and the community's needs.
What sort of capital do you need for this to sort of go forward, and what are the next steps?
Capital's $208 million. The large part of that is the processing facility and the site infrastructure that we will have to add, about half that number. And then we've got equipment, and we've got pre-strip, and that's about 30 million of that number. And then we've got working capital in there. We've also got the aspects related to contingency. And all totaled, it's about $208 million. And the next steps for this project really are to de-risk the remaining aspects of the resource and the metallurgy, extend the metallurgical data further into the deposit that we're mining in this PEA plan. And then beyond that, we want to move to permit the project. And this is one of the key advantages of this project. Because it's on private land in the United States, we can move through a state process relatively quickly. We think, and our consultants have worked this program out, that we can permit this project in about 2 years.
Yeah. Interesting. Also, what's an advantage? I want to go back to that gold price, right? Who would have thought 3,000 a year ago, even 2 years ago? You would have never thought that would be the price. So it's sort of a good advantage in terms of the project. What kind of impact would it have, this current gold price, if it continues to act this way, have on the project?
Well, very simply, if we think about NAV or net asset value, it would more than double. We'd be sitting at about $750 million of net asset value in this project at a $3,000 gold price. As a company in total, with 6 million ounces of gold, 2 projects now through economic studies, a combined 160,000 ounces of target heap leach, open pit heap leach gold production. So if we think about the leverage in the company, currently $500 million worth of NAV going to $1.2 billion worth of NAV at $3,000 gold, that's a lot of leverage. And that's not even talking about the exploration potential to grow. We know that the best place to find gold is where you found it before, and there's a lot of exploration potential on these projects.
All right, so as you steam ahead, what should investors watch out for in terms of progress in the coming months?
Well, really, we want to get that technical report that underpins the preliminary economic assessment on Mercur. We want to get that filed.
Right.
So that's the main focus for our team right now. But we're also working on the follow-up drill programs, metallurgical work, and that permitting. In fact, we will start the baseline study work next month with some cultural survey work. And beyond that, I've got to get out and tell the story. We've got a great story to tell. We've had a lot of corporate and financial strategic interest in our projects. And I think the message and the next couple of months will be around getting that review process underway, the data in those parties' hands, and we'll talk about the next steps beyond that in due course.
Yeah, well, sounds promising. Good luck. And thanks very much indeed for coming in. That's Hugh Agro, CEO of Revival Gold. Thank you.
Thank you, David.